So you've been making an effort to raise your credit score, but haven't seen any improvement. Here are the top 5 reasons as to why. Number one, you may have a high credit utilization. To fix this situation, you want to stay below 30% of your credit limit. This also makes up 30% of your credit score. Number two, you applied for too much credit recently. Not only is this a bad idea, but it also costs you up to 5 points per hard inquiry. So when creditors are looking at your credit report, they're seeing all these hard inquiries and flagging you as a high risk and denying you for the credit you're asking for. To fix this situation, you want to quit applying for so much credit at once. Number three, you have a poor credit mix of account types. To fix this situation, you want to have a good credit mix reporting to all 3 major credit bureaus each month: Equifax, TransUnion, and Experian. A good credit mix consists of revolving accounts and installment accounts. So you want to have at least one installment account which would contain a student loan, a car payment, or a mortgage payment. For a revolving account, you want to make sure that you have at least one credit card, whether it be a store credit card, a gas credit card, or a major credit card. Number four, you don't pay your payments on time. And folks, this is the number one credit killer. Having one late payment on your credit report can kill your credit score by as much as 100 points, plus be reported on your credit report as a 30-day late. This also consists of 35% of your credit score. So please do everything you can to make your payments on time. And number 5, you have too many open new accounts. So what you want to do here is you want to allow your current accounts to age for a good 6 to 12 months with a good payment history. Also, you don't want to have more than 5 hard inquiries over a 2-year period showing up on your credit report. If you like this video, please share, follow, and like. Until next time, take care.